Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate reports. In today's video, we're diving into a report from GlucoTrack. Get ready, because it involves a reverse stock split, and that's usually not the sign of clear skies ahead. We'll explain what that is and more importantly, what it means for investors. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss the latest filings with other investors. This Form 8K was filed because GlucoTrack, a company that makes devices for people with diabetes, did something called a reverse stock split. The date of the event was June 13, 2025. So what is a reverse stock split? It's when a company reduces the number of its outstanding shares. In GlucoTrack's case, they did a 1-for-60 reverse stock split. This means that for every 60 shares of stock you owned, it became 1 share. If you had 120 shares before, you now have 2. This change was put into action, made effective at 4:30 p.m. on June 13, 2025. It's important because it changes how the stock is valued and perceived. This reverse stock split wasn't a surprise. The company's shareholders had already agreed to it at a meeting in May of 2025. Keep in mind that there's a reason the company wanted it. With the reverse split, no one received fractional shares. If after the split a shareholder was entitled to a fractional share, GlucoTrack rounded up to the next whole share so you wouldn't end up with have a fraction of a share. Because of the reverse stock split, the number of shares of GlucoTrack stock in the market dropped significantly from about 34 million to around 567,000. Stock options and warrants, which are like coupons to buy stock, were also adjusted to reflect the new share price and number. The company also has a transfer agent called GlucoTrack's LLC. If you own the stock, this company is in charge of making the change and will correspond with you if you own the physical certificate. If you're holding stock through a broker, the adjustment should be automatic. After the reverse stock split, the stock started trading on June 16, 2025 with the same ticker symbol, which is GCTK. This means you won't need to learn a new symbol to find the stock. The report also had a table that helped investors understand how the reverse stock split affected some key financial figures from the past. This is shown for the years 2023 and 2025, and the first 3 months of 2024 and 2025. Looking at the numbers from year end, the company's comprehensive net loss was about $22.6 million in 2024 and about $7.1 million in 2023. The net loss per share looks alarming. The loss per share was 68.44 and 18 in 2024 and 2023, but after the reverse split, the adjusted net loss per share skyrocketed to over $4,100 in 2024 and $2,050 in 2024 and $2,050 in 2023. This doesn't mean the company suddenly lost a ton more money. It's because there are far fewer shares outstanding. This is a mathematical trick only. The average number of shares used to calculate those losses went from hundreds of thousands to just a few thousand after the split. The key here is that the underlying business has not improved yet. This section explains that the financial numbers have been updated to show the effects of the reverse stock split. This is important for people who are investing in the company. Looking at the 3 months ended in March, the company lost about $6.8 million in 2025 and $2.9 million in 2024. Remember, this is just for 3 months. The loss per share looks bad at $0.67 and $11.73 in 2025 and 2024. But after the reverse split, the new net loss is now $400 respectively. Just like the year prior section, the average number of shares outstanding dropped significantly after the split. Anyone can go to the SEC website or to the company's webpage and see these reports. Attach to views. So what's the big picture here? Reverse stock splits are often a last-ditch effort to boost the stock's price. A company might do it to avoid being removed from a stock exchange, which usually happens with low-price stocks. While it can make a stock look more attractive on paper, it doesn't change the underlying value of the company. If the company's still losing money and not improving its business, the stock price could just fall again as investors realize it's not making any progress. Alright, that's our breakdown of GlucoTrack's reverse stock split. What's your take on this move and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.